Hey guys, so I just wanted to put together a very quick informational video for everybody as I'm getting some information here. I thought that this would be an important share for most of our S Corp shareholder owners. So it seems like the IRS is getting this new form together called 7203. According to Greg White, who's one of the instructors over at CCH, one of our basically continuing education, I guess professors, right? If you want, or instructors rather. But anyway, just want to make it quick and simple. So traditionally, before all these forms came out and before the Taxpayer Cuts Jobs Act modifications to the reporting for shareholder basis, shareholders were always responsible to report their own basis. Now, most shareholders, honestly, especially in small business, had no idea what a basis is. They had no idea that they were responsible to keep track of this basis. And guess what? If they were ever pulled into an audit, the IRS would automatically place a zero value to your basis, because remember, in the tax law, the burden of proof is always on the taxpayer. So the IRS will automatically say you have zero basis in your company, in your stock basis, unless you prove it to us otherwise. Now, you might be asking, why is it important? What is stock basis? How does it work? Why do they want reporting? Well, in simple terms, think of basis as your equity in the company, or what you're actually at risk for. So just to keep it simple, let's just say you open up a company, you put in $100 in exchange for the stock. Originally, your stock basis starts at 100. You profit, let's say, $200,000 in the first year of operations. Your stock basis now increased. It goes up to $200,100. Then you contribute some capital. You add some money in because you want to expand, and the $200,000 in profits are enough, right? So, and let's say you put in $50,000 from your personal funds into this business of yours, an S corporation. Now you have invested, or you have equity in this business of $250,100, and that's your basis. Now, if you distribute the money or you have losses, the opposite's going to happen. Okay, so you can only so that's how basis fluctuates, and that's why taxpayers, owners of S corporations, are required to constantly review their basis. And there's now, after the TCJA, the Tax Cuts and Jobs Act, there's a lot of additional reporting, especially with the qualified business income deduction, for owners to track their shareholder basis and other items that deal with specifically S corporations, whether it's salary and all these other things that were less reported in the past are now being more extensively reported on. And this is just another example of the IRS really cramping down on taxpayers, making sure that basis is being reported. It's getting more and more complex, where this was like basically a non-issue is now an issue. And why does the IRS want to know what's the basis? Well, because the IRS wants to understand how much equity you have in the business. A lot of the times, people are not required to report their balance sheet with their business because they have a small business. They're not required to keep track of it. The accountants might not have kept track of it properly because there's no books and records being created. Some people literally go to an accountant once a year, give them a worksheet of their income and expenses, and that's it. And there's no basis reporting. And they might be pulling out money from that business that it's being loaned to, creating capital gains, basically creating taxable ramifications, and it's all going unreported. In our practice, we've always completed the books as needed for these specific reasons, to keep track of shareholder basis. And that's why it's very important to do that, because in certain situations, you might actually be distributing money that is triggering capital gains. And if you're not reporting everything, then you're basically skipping out on the taxes. So the IRS is losing money every year, and that's why they're coming out with these basis schedules. And there's just going to be more and more of this as we get deeper into the year. And next year and the following years, tax law is highly complex. So there's going to be a lot more reporting coming that we haven't seen in the past, because they're really trying to perfect the system, I guess, and avoid those loose ends where money is basically being lost in revenue to the IRS. So anyway, that's my quick recap as to what's going on. Again, if you're curious if your basis is being calculated by your accountants, you can always reach out to us. We can help you with that. If you're dealing with us, then we're keeping track of your basis through your bookkeeping and your accounting, and that's always something that's very important. So anyway, just be on the lookout for this. Understand the concept of basis. You don't have to know all the intricacies because there's a lot more to it, but just understand that it's an important thing to keep track of, and you should be aware of it because it is important for you basically to understand these pieces that should be there. So if you are coming to us as a new client, this is something that you might have already looked into and said, well, my other accountant never talked to me about basis. Do I have any tax liabilities that came from distributions of my equity from the business, or distributions of loans from my business and how were they treated? Did it, was there a good job in keeping track of my equity in the business? So those are really important tax intrinsics, and I want everybody here to kind of understand what's coming due and understand the reporting that's required. So anyway, that's it from Freyman CPA, short and sweet. New draft form 7203 coming out for tax season 2021. Stay tuned. Thank you.